I recently read that due to the recent Fed rate hikes over this past year, the average credit card rate in the United States is 22%. The average rate on a second mortgage or home equity line is 10%. And the average car loan payment, new car loan payment is $800, and that's on a 6-year loan. I'm also aware that the average homeowner has about 45% equity in their home due to the rapid appreciation over the last few years. So I wanted to share a story with you that came through an annual review I did with a client, which at first, until we started digging into the numbers, was really something that was unthinkable. Okay, but I wanted to show you how it played out and allow you to make your own decision. So I recently helped a client refinance their mortgage. They had about a 3.5% interest rate, but due to some medical situations with the family, they had gone about $60,000 into debt with credit cards. The cool part is that even though we increased their mortgage by $60,000 and increased the rate about 3% from what it was, due to the high interest rate on the cards, their cash flow savings were over $1,200 per month. That would have been enough. The client was thrilled, allowed him some breathing room. The next step, though, was that we put together a plan and showed them now that they were back on their feet, employment was stable, the health situation was taken care of. They were now able to take those monthly savings, so essentially making the same payments they're making now, and then apply them towards the new loan. By doing that, they took a 30-year fixed loan, and they're going to be paid off in just over 15 years, making the same payments they would have made now. If they did nothing, they would have kept the low mortgage rate, but there was really no reasonable way that they could, come up with the cash to pay off that $60,000, and the interest-only payments on those cards were really, that balance was just going to balloon over time. They would have not been mortgage free for 28 years if they did that, because they got the loan 2 years ago. So a little outside the box thinking, but it really set them up for financial freedom a lot sooner. They're going to end up skipping almost 15 years of mortgage payments at the end of the term, and they're going to be debt free from their credit cards. So if you're feeling the pressure of credit cards and higher interest rates, let's have a conversation. Maybe it doesn't make sense to do anything, but at least you'll know the numbers. I'd be glad to help out, crunch those numbers for you, and then we can set a target for the future. Please feel free to give me a call or just reply to this email, and we'll set up a time to chat through some solutions, okay? Thanks so much. Bye-bye.